Thank you very much, and thank you for coming to this topic, which for some people would seem, why is she talking to me about something that isn't about quarterly reporting or deep technology? I'm not a deep technologist. I've spent a lot of my time between banks and technology companies, connecting them, getting funding for them, building some digital banking out, which is my main area, and also on financial vulnerability. But I found myself in 2016 sitting in a room with investors on the Isle of Man, and someone said, someone in this room who's 50 now will live to 120. And I thought, wow, what if I live to 120 or even 97? I don't think my money is going to live as long as I am. So that started me on a path to trying to say, why have I not seen the signs? Why are we not seeing the signs? I mean, we in the greater financial services world, of the fact that things have changed dramatically with regard to how long we're living, how well we're living, and what we need from our financial services. So that's what got me started. And we'll talk about some potential products and things that you can do, but actually what I really would like you to do is open your minds, because this isn't the short game necessarily. This is a longer game, but it's all about inflections and signals, and when you see them, interpreting them, and not saying, it's no surprise that baby boomers, of which I am, are living longer, and that we're all coming into a big cluster of the same age, and everyone thinks you're going to get our money, but you won't, right? It's pure mathematics. You just had to step back and look at it. But people have chosen not to do that, and they've chosen to look at other parts of the customer segment. So let's get started. Let me click. Okay. So I say I'm a chief mindset officer for that reason. I'm not going to ask you to actually do something. I'm going to ask you to think about something and then do something as well. So let's start with, what do we mean by longevity? Oh, let me go back. I think I'm on the first one for me. So I say here, what can we learn from Japanese nappy sales? And this will come back middle and end of our discussion. So not a usual topic for the morning, but think about Japanese nappy sales as we go along. So what do we mean by longevity is what we'll cover as well. We'll look at the demographic shift, current products that we have in this life stage, where are the gaps, for example, what might be missing in the 100-year life, what can we do in the future, what happens if we ignore the longevity crisis, and what can you do today? Oops, my fingers are frozen. So when I say longevity to people, I'm a trustee at the International Longevity Center, which is a charity that does research in this space. If anyone wants to find out about them or get in touch with them, please let me know. Even when I started being a trustee, I was like, this is a really bad word. Longevity just means old people, doesn't it? Because that's what everybody's going to think. And that's the problem with the term. It's a bit like, when you have a business that reinvented itself, should you change the name? But they're not listening to me. It's the length of life, the quality of life, your economic, biological, and social factors in your life. It's not, oh, you're over 65 now, and let's talk about longevity. We need to start talking about this when people are in their 20s and they're going for their first jobs. How will they save? How will they invest? How will they plan for their futures? Because part of this is that their future is getting very long. So in the 19th century, the average age was 40 plus. Today, it's 82. By 2050, many people will be 100 plus. If you think about it, you've heard on television, radio, where you get your news, so-and-so is 108, so-and-so is 104, and we're not just talking about veterans, right? It's happening all the time, but people are just going, oh, okay, 104. It's happening all the time. We'll get to how many, but actually, just as a guess, how many people do you think in the UK right now are over 100 today? 5,000, 2,000, 50? Hundreds. 16,640. And rising, and we'll look at that. In America, it's over 200,000. In Japan, it's even more than that, right? It's not there's a few on the fringes kind of thing, okay? So we're risk of outliving, as I said, as stand here as a 65-year-old woman who's predominantly been self-employed, knows that I'm not going to have enough money. I married PAYE. And we're sticking with him. There's a risk of outliving my savings or my income for my life. I didn't plan on being here this long. I wouldn't plan on living to 80 or 100. And there's a risk that financial institutions are burning cash, having to make payments for longer than projected. Now, whether that's insurance or that's our pensions, and we're all talking about it, obviously, because the Chancellor's talking about it. But we're not actually, you'll see we're using models that are outdated for the life we are living now. And governments look at us in 4-year terms, and so they're not looking in the long term either. But sneaking up on us is the fact that people are living a lot longer and they're working a lot longer and they need a lot more money for a comfortable life later on. So living longer but living differently. So why is it taking so long for us to see what's been happening, hiding in plain sight? And what's the current state of play with instruments that we have? So equity release obviously is one that I get letters and calls for all the time because I'm of a certain age. I don't want equity release, and we can do better as financial services. Who's impacted? What can be done to identify, monitor, and measure? And what can you do to create products and services that meet this changing customer need while satisfying your stakeholders, members, shareholders, and adding to the bottom line? It's not like we don't hold assets. Over 50% of the property in the UK is held by people who are boomers. We have a lot of deposits that we're sitting on as well. We spend them on things like going on a cruise, maybe, or our grandchildren, or learning a new trade, or volunteering. We're not just sitting home doing nothing, contrary to what people think when I'm watching television. It's all about cremation and which retirement village I'm going to go to. This generation is different to the generations before who are getting older. And we're still using old models for our products and services and an old mindset as to how people are. I'd love to start working tomorrow, but it's not going to happen. And the retirement age is probably going to go up to 77 in the not too distant future. And it's currently taking 12 young people to fund one of me or one of somebody who's 66, 67, 68. And they're struggling to get jobs. So all these things have been in the wind, but you don't see them collectively and then do something about them. And that's where I think we're a bit guilty, okay? Right, let's see if this is the one. Okay, I'm gonna ask a question of you. So how many people do you think globally are over 60 at the moment? Throw out a number. 3 billion, okay. Anyone else? Billion. It's 1.2 billion, exactly, thank you. 15% of the global population, and it's growing 3 times faster than others. Life expectancy has increased by 25 years since 1960. And how much do you think we spend every year on average? Globally. Collectively. So collectively, we spend $17 trillion, $18 trillion. So when people say to me, old people are really boring, and only 15% of your budget for marketing goes to people over a certain age, and I've worked in areas of disability where we talk about overlooking that. I've worked in other areas where we're talking about that we're overlooking, where we have a lot that we can spend. And not everyone is going to pass this on intergenerationally. I don't have children. I'm going to spend it before I die. And I may wind up using more buy now, pay later, which is where we're seeing a surge in buy now, pay later, because I can, not because I need it. I'm actually going to pay it on time and it's not going to become debt, but because I can't get credit, even though I'm standing in front of you now. If I wanted to get a loan as a self-employed person of 65 without a regular income, I'm not going to get any credit. And I've worked in financial services since 1982. So I've had all the conversations that you can have. But if I wanted to put solar panels on my house or put a stair lift in my house or go on a worldwide cruise, I can't get any money from our regular sources. So credit scoring is something that we can look at. We need a new model that looks to the new world, right? So I said at the beginning we were going to talk about Japanese nappies, right? And Japanese nappies for older people. Japan has a very, and I'm sure you've seen this somewhere or heard it anecdotally about the age of people in Japan. The longest life expectancy in the world. So in September 2025, just under 100,000 centenarians. But they still got the rugby club where you have to be 40 to get into it, and you're in your 90s if you're still playing. And 10,000 players in 150 clubs. We're active. All of the money that you see around longevity or the news that you see is around supplements, wearables. Some of it is going to be around anti-fraud and scams, romance scams, of course, right? And I know you'll talk about that, some of that later. But a lot of it is focused on keeping us alive longer so that we can buy things, that we can keep exercising and take supplements. We're not always living as healthily as we should. How are we going to pay for that over time, right? It's great that I can buy the watch and I can take the supplements that cost £200, but if I can't get any additional money in my life, and I'm not going to sell my property and put it back on the market so a young person can have it because I don't want to pay stamp duty, how am I going to get the money to live longer? Shouldn't I be partnering, or shouldn't financial services be partnering with healthcare, with insurance, to create mechanisms for public-private type of funding as well? I'm paying for my own health care, but also I see older people paying for their children and their grandchildren's health care because they can't get into the NHS quickly enough, right? We need some new products that actually deal with this, and I'm just not going to borrow it from anywhere, okay? So in the nappy market, which is worth $3 billion now and $4 billion by 2030, from now until 2027, the forecast for adult nappies is 16% to grow to 480 million, while shrinking for children 8%. Why? Because we're not having children the same way that we did, and we're not dying. So this combination is forcing. So if you looked at nappy sales and you think, well, what is that telling me? What do I care about that? I don't have children. I don't have grandparents. I'm not walking around with a nappy myself. It's talking about the demographic shift, and it's telling you that there's a population that is living longer, and there's not one coming in behind it in the same way that it was before. So what can I do for that population that's living longer and will continue to live longer? So I might live, or you might live to 120, but somebody who comes later might actually live to 150, and better, and healthier with all the advances in science. So this is a now, but this is a now going forward. It's changed. Everything has changed. So we have our traditional products, don't we? We have our student loans, we have our first mortgages, if you can get them, pensions, ISAs, et cetera. Everything assumes a linear path. Education, work, retirement, die. Not happening. Not happening, right? We're encouraging people over 50 to come back into the workforce. People have multiple careers. They're retraining as well, but struggling to find finance for that as well. They're doing caring roles also. It's not linear anymore, and I'm not dying at 82, okay? But everything that we have in our system is catered for that. We all, she's just a little light entertainment, but so this is one version of 100, but obviously there are people still running marathons at 100 and beyond as well. It's just to say, it is happening, and as I said, in the UK today, right, it's 60,640, but the population growth by 2030 will be the largest in 65s, and by 2050, over 85s. So it's logical, right? I'm not telling you something you can't figure out yourself, or you can't find if you connect the dots, but we're not connecting the dots in our products. So this 3-stage, as we said, is obsolete. The 100-year life plus multiple careers, retraining cycles, and retirement redefined. It's going to be very hard to ever retire, really. It'll be light retirement, I'm sure, at some point. But we don't have the traditional retirement now. In the UK, consumers 50-plus spend $319 billion in 2018, 54% of spending, and it's going to go up, ILC, as I mentioned before, to 550 by 2040, and it's going up to 63%. So we are spending more, and we do contribute to GDP, even though the Chancellor might not think so. Please don't take any more money from pensions. So we do. So again, I'm just saying, there are products and services that are going to be profitable. There's a gap in the market. There's very few that actually speak to people as they go through their life. Yes, we talk about, is this mortgage right for me, right, as we're looking to prevent harm. But actually, we have 95-year mortgages now. Maybe I need a longer mortgage that I can then pass on to my grandchild, because my child by that time will be very grown as well, right? But maybe we need some other mechanisms where I can stay in it longer and I can pass on the debt. And mortgages are debt. People say, why would you want to saddle somebody with debt? It is debt, right? But if people want to get on the property ladder, maybe that's a way to go forward. We're in the workforce. Obviously, there's a lot of people who are not leaving or leaving and coming back. We contribute, yes, maybe less, but in tax contributions, and self-employment is likely to be older workers, more likely. The largest number of new businesses being set up are women over 55. I wrote Business Funding for Dummies in 2016, and I'm now coming out with a version that is aimed at my age group, because people are taking 25% of their pension tax-free to set up businesses once they've come out of that middle career or that first career, or they find themselves on their own again. They need products as well. So pensioners now hold nearly half of Britain's wealth, okay? And it's housing. One area that's been growing, and we'll look at longevity swaps and other things later, is real estate. So you will have come across somewhere maybe some bit of advertisement for retirement villages. Real estate, and specific real estate for people to move in when they're over 55, is an area that's booming. How do I finance that if I want to buy my apartment there, if I want to build it? We don't necessarily have specific products now for that, but it's an area that's going to continue to grow, this communal living, especially as people haven't had as many children and they'll find themselves on their own at a certain point. So I don't see many specific products that cater to this. That yes, there's the buy-to-let and there's other kind of housing, but not specifically for this group. So we could do with some tailored solutions that take into account our whole of financial life, from when we first enter the system in our 20s probably, all the way through to what will be around 100. So longer financial journeys that are not linear, pension systems under pressure, savings gap widening, healthcare, obviously costs are rising. The other thing is that we have not got away from dementia, and I'm not saying that I ignore the fact that cognitive decline has an impact on understanding of financial services, and also what we need in terms of other products that may be linked to cards that have controlled spending, lasting power of attorney, biometric cards so that you're not having to remember PINs. So again, there's other areas that we can create some products that meet that need as well. There is still a big thing around security. The older you are, I think the more you flinch when you find out you've been hacked for the 99th time, partly because we do have assets that can be stolen. And it's a fallacy to think that digital experiences are not what older people want. They do. They just need the option of having the digital or the face-to-face and not having only one route thrust upon them. So I said before, we won't go into this because of time as well in great detail, but we are using old models and tools for the new world. So actuarial analysis, using statistical models, right? We've already discussed that our life expectancy isn't the same as it was in 1950 or 1960. So why are we still doing the same thing when it comes to the models? Mortality projections, we've already decided that we're going to live longer. So again, for financial planning, insurance and pensions, it's not working anymore. So scenario analysis, again, if I have different rates of the mortality and different economic conditions, again, you need to look at them when you're creating a product, pricing a product, and creating new products. But we're still using these in creating financial services. Let me just, it's easier for me to see from here, she says. So when it comes to things like pricing, obviously, premiums is one example where you can see that you're having an impact of longevity risk, right? Insurers and pension providers need to factor in the longer lifespans, which leads to higher premiums, but also higher costs when you're paying out. Dynamic pricing might be something to consider. Longevity-linked securities, new products like bonds. The tontine, which is illegal in some areas now, is coming back into play, where we all pay in and each person gets as they need. And longevity swaps, which pension schemes are using to transfer the risk to reinsurers. So these are all things that have been brewing and developing and coming to market. I don't know if any of you in the organizations that you work in have seen these being developed as financial products. The thing about financial services as well, we talk about financial services. It could be retail banking, it could be pensions, it could be insurance. It could, it's quite wealth. Financial services as a wrapper is quite broad, and I appreciate that this covers more than where you might be working. But we are slow to respond, and we keep doing things that are just based on short-term profitability, and we actually need to look a little bit beyond that now. For this, what's interesting to me here is that the longevity risk significantly impacts pension liabilities. A 3-year increase in life expectancy could raise pension liabilities by 9%. And we've already established since 1960 there's a 25-year increase in life expectancy. So a 3-year increase is not, given all we're throwing into keeping us alive, is not that big of a lift if you think about it, and it has an impact on the products. Half of UK employers believe the shape of work will need to change in the future, but only 12% are doing anything about it. And I get it. We all have quarterly reporting, we have short-term profitability, but somewhere in the strategic planning, we need to take a step back and go, we need to look a little bit longer term here, and we need to put some things in place that address the fact that people are living longer, and it impacts everything that we're doing. The average amount retirees require per year for retirement in 2025 is $36,915. Some people say 43,000, okay? Higher than 25,000 higher than the annual state pension. So to live comfortably as well, where it says 50,000 here, just this week I read that for millennials, they say they think they're going to need 100,000 to live comfortably, whereas here in 2025, for the world that we're existing now, we're saying 50,000. I live in central London. 50,000, even if I stay home all the time. I have a service charge, I have food. This is not going to go very far. I would need more than that. So I could probably get to the age of 97 and live comfortably for about 11 minutes, given what I have now, right? Because I wasn't paying attention all those years ago as well, okay? And we know there's a problem with the pension shortfall, right? I'm not telling you something that you don't already know, but what I'm saying is we need different products earlier, people saving, and we need different products that take the view of we're going to live longer and we're going to live healthier, and what does that look like? So I said, I just want you to think about these things, right? We might have some products that are like flexible loans, as I said, for retraining, that suit the extended life. I've said to you already, credit scoring needs to change. It absolutely needs to change, because it's not reflecting anything about how much longer we're living and how we're working in different stages now. Income smoothing for non-linear careers would be helpful. Flexible pensions, like we said. Longevity-linked mortgages. Intergenerational finance platforms. We've seen this start, but this is great to be able to have the grandparent and the grandchild, for example, doing something together, because as we see, 96% of grandparents spend money on their grandchildren. So those who don't have the money, the grandchildren, but the grandparents who do have the money, what is a tax-efficient financial vehicle that we can create for them not to have to wait for me to die to get that money, right? So, and again, healthcare costs, they're going up, and we seem to be moving into more of a private-public model. When I saw the Portland Clinic and the Cleveland Clinic move into Great Portland Street a few years back, that was one of those signals that told me we're heading very much towards a hybrid model of how we pay for our healthcare. They weren't coming just for the fun. Financial wellness programs, really important as well, especially around estate planning, as we've said, and intergenerational wealth. Reward loyalty and appreciate predictability of later life customers. They stay with you longer if they're happy. So rather than penalizing them for being loyal, maybe you can look at those kind of products. Reward the lower default and delinquency rates, like I said, with the buy now, pay later as well. And we talked about channels. 15% of marketing is spent on older consumers because everybody thinks it's really boring, but maybe it's not so boring, and maybe it's time to shift some of the marketing budget to the people who actually will have the money to spend, will spend it, and will stay with you longer as well. You're the technologist, not me, but I'm just thinking, obviously the data-driven longevity modeling will come into play. And we talked about digital first and security. We're all building in the cloud now, but it's just easier to adapt to the changes that we haven't made. And open banking for intergenerational and cross-life cycle planning are some of the things that come to my mind, but obviously you'll leave and have more thoughts and more hands-on experience. I believe that at some point we're going to have some regulation around, we talk about harms now, obviously with new consumer duty, which I'm all in favor of, but I think we're going to have some pressure around future-proofing for this fact that we are going to be living longer. It's not now, but I think it will come. And I think all that we've talked about already, so we will go back. So again, maybe we need to look back and rethink our core systems for a different cycle of a client, of a customer. The old AI, we couldn't have one presentation about AI, right? AI-driven financial planning tools that take into account the data that we've been talking about and the need to change the models, and more modularity and flexibility that change with my life. And as I said, partner with health tech, insurtech, and government initiatives to create maybe a finance platform, right? So that people who need it, but only need it as and when, can still get access to the finance that they need. And I think cross-industry coalitions on longevity finance are needed. We need to get around the table with everybody. Because I said, a lot of it is focusing on health and on wearables, because it's easy pickings, right? And there's a lot of equity funds that are going into that. It's wider than that. It's about my leisure time, my mental health, my social time, where I live, how I understand my financial services as well. It's everything in our lives needs to sit around the table and actually come together to create new products. So the 100-year life isn't a future scenario. It's here now. The 95-year mortgage, I said, is here, but we need more. We got to stop thinking in terms of quarterly reports and 4-year terms. I know we need to acknowledge them. Obviously, that's the here and now. But we need another kind of bluer than blue sky thinking time. We looked at Japan and the people in the nappies, and they're not alone. Italy, Spain, the US, Israel, Germany, UK, and beyond, all living a lot longer. But while we're in Japan, and the concept of ikigai, finding a purpose in life that's bigger than your life, finding something that you love, something that you're good at, something that the world needs, and something you can get paid for, is a great idea. It's a great concept from Japan. And if you can create products and services and culture and education for your organizations to adapt to this, I would feel very happy about you embracing ikigai. Thank you very much. Move on. Okay. That's all right. Yeah.